One of the hardest lessons I've learned as a CPA is how to not get fired from clients. And you learn this only by getting fired. You learn this only by making mistakes. So this is today I want to talk a little bit about how I learned the biggest lessons early in my career and how that informs my practice now and how we work with clients and really what I want to do with this platform, with my newsletter, with my online presence, right? So let me tell you the story. This was, 10, 12 years ago. We had met a client or a prospect, call it September, October timeframe. And typically, when you meet prospects around this timeframe, they don't have their returns quite done yet. They're usually upset. And they're upset at their current provider because they're not done with their returns. They don't know how much they're going to owe, right? They've done no tax planning. We meet this client, we promise them the moon, right? There's obvious strategies we can do. Yeah, I follow them through the structure, election timing, core foundations of setting tax strategy, and we make some promises, right? So the end of year comes and goes. We finally get the returns. Then the notices start rolling in. And so we spend a lot of our time playing defense on this client in the first few months. Then we get the financials, and then we find out all the journal entries that the CPA, the old CPA, was making or had to make to balance the financials to prepare their tax return, right? And so what happens is we spend a lot of our time in defense here in notices. Then we spend a lot of the time with scope creep, letting it get out of control, right? All the while, we can't focus on the strategy we had promised in September, October, because we're dealing with these issues we didn't foresee. You can tell what's happening here. We finally get to the end of the returns. We're proud because we rolled retained earnings, the trial balance is balanced, right? We were finally able to make heads or tails of the financials. We prepare the tax return. The tax return's right. We go to the owner, we sit down with them. This is a year later from the first time we had met with them. And we say, Mr. Owner, you owe this much in tax for last year, which will have penalties and interest on it. And then you're also going to owe this much in tax to get you paid up for the current year, right? I thought we had checked all the boxes we need until the owner gives me a set of his current financials. And he doesn't have any cash, zero cash to pay the taxes due. And it comes to the question of where the hell am I going to come up with this money from? Right. And so it completely changed my mindset, right? It completely makes you confront the fact that they're not paying us to check boxes. They're not paying CPAs to promise things and not deliver, right? We are responsible for a big cash outflow, right? And so we can do things to move the needle, to reduce that cash outflow, and to change things and to help the projections forward. But at the end of the day, what I had let get past me was where I fit in that, right? And so I think my lesson today I want to talk about is how CPAs fit into this small business finance world, right? So generally, small businesses, up until they hit 3 to 5 million of revenue, really can't afford a quality full-time accountant on staff. Right? There's no full-time CFO who's able to do financial forecasting and planning and cash planning and budgeting. Right? There's usually not an accountant on staff full-time, maybe a small bookkeeper or a part-time bookkeeper to keep the books and records going, or to answer sales tax questions from the external CPA. And so what happens is a lot of times in small business world, in SMB world, you get these fractured finance pieces. And without someone owning that entire relationship, you can completely miss the whole goal of that. The entire goal of a finance function, whether this is a small business or whether this is a Fortune 500 business, the entire goal of that function is to make better decisions, make informed decisions. You want to know, what is the impact of hiring another person? What is my run rate? How long will I be able to operate this company without additional capital or financing? When can I take a distribution? When can I start to feel the value that I'm producing for my clients? How much is enough capital and cash to keep in that business? And when can I take cash out? When can I pay and buy a new house? When can I buy a new car? When can I pay for my kids' college? Right? All these things are what goes on in this business owner's head. Right? And so what I've done really in the last few years is try and put this pieces together. Right? I talk a lot about tax savings. I talk a lot about tax planning, tax structuring, but that's just the core set of what we do as CPAs, right? And so to get here, to really do proper tax planning, we have to start one step backwards, and that's the accounting, right? It's the accounting piece is available for anyone. Anyone can run financials out of QuickBooks. You can sync your books, sync your bank statement, and start somewhere. start by coding transactions, right? So getting the accounting right is just a matter of discipline. It's a matter of looking at the financials monthly, looking at your cash balance and your working capital weekly, make sure you don't run out of money, and set your budgets annually and look at them quarterly, right? You want to just set this cadence. This is nothing more than discipline. This is looking at this, setting time in the calendar, and getting it done, right? Once we have good books, once we're confident in our accounting system, we can then look at, okay, how can I as an owner now structure my departments such that I can start to step away? And this is the accounting piece that we talk about, internal controls. Really basic internal controls. You don't need full-blown internal control audits to really set yourself up so that as an owner, you can start to decompress or focus on strategy without being in the weeds and thinking someone's stealing from you. We talk about things like new vendor reports. The number one way small businesses get stolen from and fraud is new vendors and fraudulent vendors. We talk about pay rate changes for payroll. Who has the authority to change pay rates for employees, and how can we limit that and watch over that? Then we talk about credit memo reports, right? Who is writing off your receivables? And is there legitimate adjustments? And if so, why are those being caused? Right? So we just a couple of reports looked at every monthly can help the owners build confidence to step away and look at it. Now, once we have this confidence, once we have these accounting records we can look at and start to rely on, we can then do proper tax planning, right? You can't out tax plan and out tax loophole bad accounting. It's going to catch up to you one way or the other. And so once we can finally do tax planning with all these proper financials, we can then talk about structures. Are you with the right partnership, S Corp, C Corp, right? What is profit going to look like now in the future? What are streams of income happening? How are you capitalized? We need to know, where is there debt on the books? If so, where it's coming from. What secures that debt? We want to start to siphon or silo off these trades or businesses, these activities, to get the best tax efficiency, to get the best tax structure and protection for you, right? So then we can start to structure in, okay, well, what does the next 5 years, 10 years look like for tax strategy? And we can start to set a roadmap, where we start to set a tax life plan of what you will do in what stages of life, whether you're early career, whether you're mid-career or late career, about to retire or retired. There are given strategies in each one of those life phases that don't leave you guessing. You can be pretty predictable with what you're going to need to do in each of those phases. And so we just lay those on the table. Here's what we expect to happen when you sell your business. Here's what we expect to happen when you're 2 or 3 years from retiring and selling your business, right? So we can work backwards and have a predictable flow of strategies we're going to accomplish. Once we have, again, good books, good internal controls to focus on strategy, good tax strategy being executed, we then need to look at what's going to happen in the future, right? And how do we keep track of what's happening in the company to stay on pace? Simple budgets. Start with your P&Ls. Make an average of the last 12 months of your P&Ls and project that forward. Start there. You don't have to have the most sensitive analysis and Excel models to get really good information from your financials. You just have to set your budget right. Look at it quarterly, forecast it, what's going to happen, right? This is when I'm developing Maslow's hierarchy of finance, right? So Maslow's hierarchy of needs, right? No one wants to kiss when they're hungry, is the kind of the famous saying. Maslow's hierarchy of finance needs is really about, what are your priorities in your business to execute well, to sleep well, and to run your business. You need working capital, i.e. cash. You need cash in your business to run. You can't run out of cash or business stops. You can't make payroll, people quit, everything ends. So working capital is number one. Then next, how are you going to grow? Sustainable growth. You want to make sure that you're able to grow predictably, sustainably, not out of control. Before that, you want to pay high interest debt off, right? You want to make sure that if you have a 20% hard money loan, what is your plan to pay that off? No one wants to pay that interest, right? You have credit cards on the business, making sure you're paying those regularly, right? And so it's really these core sets of ideas that you want to first, second, third. And once you get comfortable in working capital, you're paying off high interest debt, you're reinvesting in growth predictably, then you do things that help secure your business and make it safer and recession proof. Things like buying your own real estate as a business makes you foolproof, right? Look at the skating rinks around the country. How many of those would be totally wiped out and gone if they had to pay market rent? A majority of them have been around for 40 years, so they own their real estate. They can control their pricing. They have a little bit of overhead and they have a lot of variable costs. And this insulates them from rate changes, right? You don't have to leverage up to survive in that business. And lastly, we could then talk about taking profit distributions. Once you have your business running and crossing out these basic needs, then you can make money personally. You can take money out. You can start to have predictable cash flow to yourself. And you need to get paid all along the way, but this goes into our working capital and other analysis, right? And so this is kind of how I start to think about once we have the basics of accounting, of tax, then how do we look forward? If you're not a finance pro, you need help knowing what to focus on first. You may see your friends or read about other people taking out distributions or how to leverage up and save for retirement. You may not need all of those fancy plans at this moment. You have to focus on the basics. In the small business world, if you're not a finance pro, it gets hard and it gets tricky. You're generally an operator, you're an expert in your field, and you're not usually a finance pro, right? And so this all is kind of where I'm taking this content, where I'm taking this video, this YouTube channel, where I'm taking my newsletter, is layering in these complementary areas to SMB, right? To the small business. And in small business, I use real estate as well. A lot of private real estate is really in the same game as small business. They have employees, they can't run out of money, they need money to make payroll, right? They have costs, fixed costs. It's just a different industry. And so what I want to do, again, is to help business owners, help operators and founders make better decisions, financial influenced decisions. They need to know what the records are. They need to know what the accounting books say so they can make better decisions, good decisions, so they know they're not guessing, staying up late. Can I make payroll? When can I hire the next person, right? This is the entire intent of what I want to build and what I'm building here. Again, this started because I lost my way in what value I bring to clients. I lost my way early on. I didn't have it in what clients are looking at me for, right? And so this is the answer, and this is what we're going to do. I appreciate you being here for the ride.